Greetings, everybody. Welcome to the weekly economic update. It is Monday, September 12th, 2022. Hope everybody's having a great day out there. Sorry I didn't do a video on Friday. I was a little under the weather. Still feeling a little right now, but back in the saddle. So if it's your first time watching, please give me a like, share, subscribe. I would greatly appreciate it. And let's go ahead and jump into the numbers and see how the market did today. Things look pretty good. The Dow Jones was up 0.71%, closed up 229 points, closed at 32,381. SP 500 was up 1.09%, closed at 4111. NASDAQ up 1.27%, closed at 12,266. Small caps are up 1.22%. The VIX was also up today, almost 5%, which is a little odd considering that the markets were in the green today. Moving over to Canada, they were up 1.08, Brazil up 1.01, Mexico up 1.76. Jumping across over to Europe, Germany up 2.4, the UK up 1.66, even with the sadness of losing the Queen over the weekend, or I guess it was Thursday. Let's see here, France up 1.95, the Euro Stoxx up 2.14%, Netherlands up 1.59. Let's see here. Spain up 2.01, Italy up 2.33, Switzerland up 0.83, and Portugal up 1.58. The Russian exchanges were both up. The MOEX up 0.97 and the RTSI up 1.42. Headed over to the Asian markets. Japan was up 1.16, Australia up 1.02, New Zealand up 0.39. Over in China, the Shanghai up 0.82, the SESE component up 1.11, China A50 up 1.68, DJ Shanghai up 1.01, and the Hang Seng up 2.69%, and the Taiwan weighted came in up 1.54%. So, like I said, things look pretty decent today. So, all right, well, let's go ahead and dive into the weekly update. Things looked, and go through the information there. The week on Wall Street, in a holiday shortened week of trading, stocks posted healthy gains despite more tough talk on monetary policy from Fed officials. The Dow Industrial Average rose 2.66, while the S&P 500 gained 3.65. NASDAQ was up 4.14, and internationals were down 1.26. Stocks rise. Stocks fell coming off the Labor Day weekend, dragged down by news Russia was cutting off natural gas supplies to its European customers. Stocks were also under pressure due to a surprisingly strong report on business conditions, which heightened fears of continued Fed hawkishness. Again, the interest rates are still going to have to go up for a while until we get inflation back down. Sentiment quickly improved as bond yields turned lower and oil prices fell. Investors reacted positively to comments from Fed Vice Chair Lael Brainerd, who reiterated the Fed's commitment to quashing inflation while acknowledging the risks of going too far. Stocks added to their gains on Thursday as the market digested another speech from Fed Chair Powell and a 0.75 hike by the European Central Bank. The markets surged on Friday amid little news, ending a positive week on an upbeat note. No inflation walkback. In his first public comment since his speech at Jackson Hole that sent markets into a tailspin, Fed Chair Powell did not seek to soften the edges of the Fed's commitment to fight inflation. In an interview on Thursday, Powell affirmed the need for sustained and robust actions to bring down inflation. He emphasized that it was critical that the longer inflation remains well above the target, the greater the risk the public does begin to see higher inflation as the norm, and that has the capacity to really raise the cost of getting inflation down. With the FOMC set to meet on September 20th and 21st, these comments may indicate that the market expectations of a rate hike of 0.75 this month align with the Fed's plans. All right, economic data this week. We have the CPI tomorrow. Wednesday is the Producer Price Index. Thursday is retail sales, industrial production, and jobless claims. And Friday is consumer sentiment. Only one company reporting earnings this week, and that's Oracle reporting today. All right, so some decent news there. Certainly not the worst. Other than Europe being in the red last week, things look pretty good. All right, let's blaze through a couple of these articles, and then we'll be out of here. I'm going to try to make this quick again today. The S&P 500 gains as Apple rally boosts tech ahead of inflation data. The S&P 500 gained Monday, underpinned by a rise in energy stocks and an Apple-led rally in tech, as investors awaited key inflation data due Tuesday. Following a strong end to the week, technology added to recent gains as Apple soared more than 4%. Apple launched a slew of new products last week, including its latest iPhones that some say are seeing more pre-order demand than iPhone 13s rolled out last year. Quote, so far demand and orders for iPhone 14 are tracking slightly ahead of the iPhone 13 and are tracking ahead of our expectations out the gates, Wedbush said in a note. Semiconductor stocks stumbled, taking some of the shine off the gains in tech as the U.S. government is reportedly drawing up plans to impose fresh restrictions on chip exports to China. Energy climbed more than 1%, riding the coattails of rising oil prices as investors weighed up potential supply disruption as the Iran nuclear deal hit a snag and the U.S. is set to ban Russian oil shipments. The data comes ahead of key inflation reports that economists' forecasts show further slowing headline inflation driven by lower oil prices. But core inflation, which excludes food and energy, is expected to rise owing to a, quote, services inflation due to wage pressures, labor shortages, and elevated short-term inflation expectations, Goldman Sachs said, forecasting core inflation to have risen 0.3% in August. Well, that's not good news. All righty. More on the oil front. Next up, oil prices amid supply concerns heading into winter. Oil prices rose Monday, shaking off weaker demand expectations as supply concerns mount heading into the winter. Brent crude futures rose $1.51 or 1.6% to 94.35 a barrel. And U.S. WTI crude was up $1.28 or 1.5% at 88.07. U.S. emergency oil stockpiles fell 8.4 million barrels to 434.1 million barrels in the week ending September 9th, its lowest since October of 84, according to data released Monday by the U.S. Department of Energy. The Biden administration is weighing the need for further SPR releases after the current program ends in October, Energy Secretary Jennifer Granholm told Reuters last week. Global oil supply is expected to tighten further when a European Union embargo on Russian oil takes effect December 5th. The G7 will implement a price cap on Russian oil to limit the country's oil export revenue, seeking to punish Moscow over the invasion of Ukraine while taking measures to ensure that oil could still flow to emerging nations. The U.S. Treasury, however, warned that a cap could send oil and gasoline prices even higher this winter. So that is not good. So if you're investing in oil, you might want to hold off on any major decisions there as far as buying or selling. So because if there's a crunch again, we could see bigger problems moving forward. All right. And one last bit of news. This is certainly not real great. Coal, lumber, and food under threat by a potential U.S. rail strike. When it rains, it pours, right, folks? Commodities groups are sounding the alarm as a potential railway strike threatens to cripple transportation of vital goods and food and lumber to coal. Railroads and labor unions worked through the weekend to try and avoid a strike that could cost the U.S. economy more than $2 billion a day. Though there isn't much sign of progress ahead of the September 17 walkout, a strike would threaten shipments of produce, grains, and energy and fertilizer when food inflation has soared. The potential disruption comes from as the world increasingly turns to the U.S. for food supplies, with Russia's war in Ukraine roiling commodity markets and disrupting crucial grain shipments from the Black Sea, one of the world's breadbaskets. Global food prices have touched records in recent months as inflation ripples through economies and hunger levels rise. It would have a significant impact on U.S. coal industry since the vast majority of the fuel is transported by train. Yep, I see it all the time heading up and down next to I-25. Coal would stop, said Ernie Thrasher, CEO of X-Coal Energy and Resources LLC, the biggest U.S. exporter. Quote, no coal is going to move until these guys go back to work, end quote. Lumber prices already reacting to the potential labor threat, soaring to levels not seen in a month due to shipment concerns. Futures contracts rose by 9.6% on Monday in Chicago to reach the exchange limit of $559.8 or in 80 cents per 1,000 board feet, the highest price since August 18th. Quote, a potential rail strike could be an issue, end quote, since most lumber is produced in the Western Canada and travels to market via rail, Mark Wild, an analyst at BMO Capital Markets, said in an email. So again, it's like we kind of get a few things going in the right direction, and then bam, you get smacked again. And so if it's not, an energy crunch potentially this winter, we've got a rail strike potentially coming up here in the next couple of weeks. So, or I guess in the next 5 days. So not good. Anyways. All right. Well, hope everyone has a fantastic evening. I'll be back tomorrow with the Liberty Call on Tuesday. So hope everyone has a fantastic evening. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. And y'all have a good evening. Bye-bye.